We will now be discussing another financial planning tool, which is projecting financial statements. From our previous discussion, we already learned about how to make budget plans. We discussed about the sales budget, the cash budget, and production budget. So, the contents of those budgets, the contents of our sales budget, and our production budget and cash budget can be used and is very useful in preparing projected financial statements. So what are projected financial statements? Projected financial statements are financial statements similar gihapon siya or very similar gihapon siya sa katong atong gi-discuss na financial statements pag prelim. Ang difference ra is ang usual na financial statements is based on past transactions, whereas kaning projected financial statements based ni siya on expected or future expected transactions. So, it sets the overall goal for a company's financial performance and position. Also, it sets targets that controls and monitors the activities of the company. So, future-oriented ni siya nga financial statements. So, ang projected financial statements, usually, na siya tulo ka statements na usually we project them. So, first is the projected statement of comprehensive income. So, ang projected statement of comprehensive income is a projection on the changes in equity during a period from business transactions. So, these transactions does not include transactions with the owner. So, kanang pag-invest ni owner or pag-withdraw ni owner sa kanyang investments, dili ni siya included sa comprehensive income. So, ang content sa projected statement of comprehensive income is strictly income and expenses ra. So, if you could remember, di ba, naghimutag budgeted sales previously. So, ang contents ana is diri siya mabutang sa projected statement of comprehensive income. Next is projected statement of financial position. So, the projected statement of financial position shows the three elements gihapon of a financial position, which is assets, liabilities, and equity. So, it will help us analyze and evaluate factors such as future liquidity, future solvency, and the need for the company for additional financing. So, makakita ta if mag-need ba ang company o additional financing if i-implement nila ang ilang mga plano. So, next, we have the projected statement of cash flows. So, the projected statement of cash flows will show information about the future cash receipts and future cash disbursements or payments of the company. It will also help us assess the ability of the company of our business to generate cash in the future. So, what are the steps on preparing projected financial statements? The first step is to forecast sales. So, kay baw na taan ni kay we already learned how to make budgeted sales. The next is we need to forecast costs and expenses. So, diri gihapon masod ang budgeted production, then napay ka ng more specific is ka ng mga budgeted labor or budgeted raw materials, budgeted overhead. Then, third step is to forecast net income and retained earnings. Next, after forecasting net income and retained earnings, we will now determine balance sheet items. Then, lastly, we will determine payment schedules. So, first step is to forecast sales. In forecasting sales, we need reasonable assumptions, di ba? Katong nag-budgeted sales ta is nag-assume ta nga in this type of economy, inga niya atong expected number of sales nga na. So, these reasonable assumptions should be considering external and internal factors. So, ang external factors, these are factors na maka-affect sa atong sales which the business cannot control. So, kani mga factors nga dili makakontrol ang business. On the other hand, ang internal factors, these are factors that affect our sales level of sales pero within the company siya. So, it can be controlled by the business. So, what are examples of these factors? So, sa external factors, we have GDP growth and inflation rates, interest rates, forex rates, kanang income tax rates, kanang the passage of train law and create law. Then, napod tayo developments in the country or ang economic situation sa atong country. Competition. So, kana atong mga kakompetensya nga businesses if ever na aman. Then, we have economic crisis, regulatory environment, if strict pa ang environment nga or ang industry na where our business belongs to. And of course, we also have the political crisis. So, next is internal factors. Maka-affect sa atong expected sales internally are the following. So, we have our production capacity, ang kung unsa kadaghan ang kayang i-produce sa atong assets. Then, manpower requirements. So, kani atong labor if nabatay mga tao na mo-produce. Then, we also have management style of managers. So, of course, human as we are, maka-affect jud sa atong productivity kung unsa ang atong mga gi-employ nga mga tao. Then, next is reputation and network of the controlling stockholders. So, ang reputation and network sa kanang nag-manage bitaw sa kanang stockholders nga naay dako nga say sa unsaon pag-manage sa business. Then, lastly, we have the financial resources of the company. Of course, kay if abundant ang atong financial resources is dali ra ta makakuan sa atong production. Whereas kung nihit bitaw ang atong financial resources if gipit ta is maglisod ta, di ba? So next is we have to forecast costs and expenses. So cost of sales, these are direct costs associated in generating sales. So for example, if ang imong business is a food business, so ang atong sales coming from sa pagluto og food, sa pag-serve og food. So, unsa man ang atong cost of sales? So, ang atong ingredients used in making food. So, mao na ang atong cost of sales. What if ang atong business is buy and sell? So, ang cost of sales nato is kanang cost sa atong product nga gibay. Then, patungan raman na siya percentage for commission or profit. So, before siya i-sell. So, unsa pa man. For example, ang atong business is mag-ukay-ukay na. Diba? Rampant man na siya karon kanang mga ukay nga items. So, we generate income by selling clothes. Then, unsa man atong cost of sales ana? Ang cost of sales is ang price sa atong pagpalit sa atong clothes, sa atong ukay before nato siya ibaligya. So, to get the cost of sales ratio, important ni siya in projecting So, ang formula is cost of sales divided by sales. So, opposite ni siya sa atong, if you could remember, sa atong gross profit ratio. Then, historical cost of sales ratio is just cost ratio from previous years. So, i-collate ang data from previous years. Then, kuha ra ang cost of sales ratio from previous years. Then, operation, administrative, or distribution cost, or any of our business expenses are classified either as variable or fixed costs. Variable cost siya if mo-vary ang atong expenses depende sa atong level of production or sa atong level of sales. So, for example, kani atong cost of sales, these are variable costs kay magdepende man siya if pila ang atong sales, di ba? Sa pa man ang variable costs na to? Siguro for if mag-manufacture ka o let's say mga books, ang variable costs na to ana is ang atong raw materials, variable cost na siya. Kay magdepende siya sa level of production. Then, on the other hand, fixed costs are costs that don't change despite changes in levels of production. So, ang common example ani is kanang kuryente, sweldo sa workers nato kay bisan pag pila ang atong sales or pila ang atong need i-produce is fixed naman ang atong bayaran ana. So, next is forecast net income and retained earnings. So, in forecasting net income, dapat we should take into consideration ang relevant interest rates and relevant tax rates. So, Philippine usury laws, ang atong interest rates, kung ano siya, 6% to 14%. So, if mulapas na kaana is, kung ano siya, dili pud illegal but excessive na pud na siya nga interest rate. Then, relevant tax rates between 2% to 35%, depende na siya if pila imong income, if corporation registered as corporation ba ka, and kanang dependent po siya if unsa ang imong kibaligya. So, to get the projected retained earnings, we have to add our projected net income and our beginning retained earnings, then subtracted by our dividends to be declared. So, kani siyang formula is magamit na siya if corporation ka, kay nakay retained earnings. Fourth, we need to determine balance sheet items that will vary with sales. So, cash, receivables, payables, inventories, accruals, and deferrals, kanang mga accrued expenses, kanang mga deferred expenses. So, these accounts usually vary with sales. The next is to determine payment schedule for loans. So, mangutang man jud ang business. So, mag-determine ta if when nato bayaran atong mga loans. So, computations for interest expense, income tax payable, and retained earnings. So, we have two approaches in preparing projections. We have first is the percent of sales method, wherein you express various income statement items as percentage of our sales. So, usually, ma-use ni siya in projecting our income statement. Then, we also have the judgmental approach, which estimates value of balance sheet accounts and uses external financing as a balancing figure. So, usually, magamit ni siya on our balance sheet accounts. But, dili ni siya percent of sales method rang gamiton or judgmental approach. Pwede nimo gamiton sila both at the same time when you prepare your projection. So, makita rin ato unya sa atong example. So, we have comprehensive illustration on making projected statement of comprehensive income. Now we have our historical income statement for DNE company. We will use this as our reference in making projected income statement for DNE company. So like I said ganina, we will need assumptions in making our projected financial statements. So first is sales are expected to increase by 10% in 2021 from the 2020 sales level. This growth assumption is based on the statement of the external and internal factors related to the company and the historical growth of the company. So, ang atong projected sales will increase by 10% from our 2020 sales. So, unsa man atong sales from 2020? So, naatay 150,000 ni. Nya times 110%, so we have 165,000. So, ang atong sales will be 165,000, ang atong projected sales. Next is to compute for the cost of sales percentage in 2020 using the formula. So, unsa ganito atong cost of sales formula ratio? So, we have cost of sales divided by sales. So, going back, natay 60,000 cost of goods sold or cost of sales divided by 150 na sales. So, we have 40%. The next is to compute the projected cost of sales using our answers in item 1 and item 2. So, natay projected sales kanina na 165,000 times 40%, which is our cost of sales ratio. So, we have 66,000. So, ang atong projected cost of sales for 2021 will be 66,000. The next is to compute for the variable operating expense. So, ang atong gi-assume is 12% of our projected sales will be our variable operating expense. If you could remember, ang variable costs, diba? These are costs that vary with our sales or level of production. So, in this case, ang atong variable operating expense is mo-vary siya on the level of our sales. So, projected sales, we have our projected sales of 165,000 times 12%. So, we have our projected variable cost of 19,800. Next is to compute for our fixed depreciation. So, our depreciation expense is 5% of the gross beginning balance of our PPE. So, as of December 31, 2020, the gross balance of PPE is 320,000. For January 2020, the business plans to purchase 80,000 worth of new PPE. So, our fixed depreciation is 5% of the gross beginning balance. So, natay ending balance as of 2020, which is 320,000. Then, mo purchase man ta on 2021, mo purchase ta og 80,000 worth. So, naatay 400,000 nga PPE. So, times 5%, ang atong fixed depreciation expense will be 20,000. Then, compute for total operating expenses. So, ang atong sa answers in item 4 and item 5, i-add na siya. So, 19,800 plus 20,000. Next is, we will compute our interest expense. So, naatay first loan which will mature on June 30, 2021. And the remaining principal balance to be paid on June 30, 2021 is 125,000 with an annual interest rate of 8%. So, natay principal of 125,000 times ang atong interest rate na 8%. So, kaning 125,000 is bayaran man siya on June 30, 2021. So, from January to June, that is 6 months. So, good for 6 months ra ang atong interest nga mabayaran. So, we have 125,000 times 8%, so times 6 over 12. So, we have 5,000. So, 5,000 ang atong interest on the first loan. Then, next is to compute another interest expense for our second loan. Incurred siya on December 31. Then, to be paid every June 30 and December 31. So, twice ka mo bayad every year. So, on June 30 and December 31. So, ang interest rate is 8%. Then, for every payment is 50,000 ang atong mabayaran. So, interest from January 1 to June 30. So, 6 months na siya. Then, we'll pay po tawag interest from July 1 to December 31. So, January to June, ang balance sa atong loan is 300,000. So, 300,000 ang atong base times 8% na interest rate, then times 6 months divided by 12 months. So, we have 12,000 ang atong interest from January to June before ta mo bayad sa first principal na 50,000. Unya, pag abot og July, nakapay naman ta og 50,000 pag June 30. So, 300 minus ang atong payment na 50 pag June 30. So, we have a remaining loan of 250,000. So, from July 1 to December 31 is natay 250,000 na loan. Then, mag-multiply ta og 8% na interest rate. Then, ang remaining months of the year, which is 6 months. So, we have interest on our second loan from July to December, we have 10,000. So, ang atong total interest expense is i-add running item 7, 8, and 9. So, 5 plus 12 plus 10, we have 27,000 total interest expense. So, ang result sa kanang atong items 1 to 10, ato ra siyang ibutang sa atong projected income statement. So, ang atong net sales, 165,000. Then, ang cost of sales, which is 40% of our sales. We have our gross profit. Then, ang operating expense. Atong, the sum of our fixed and variable expenses. Then, we have our operating income. Then, ang atong interest expense. So, we have our income before taxes of 32,200. So, assume that income tax imposed on corporations is at 30%. So, 32,200 times 30%, we have 9,660. Then, we have our net income of 22,540. Next is, we will have a comprehensive illustration on our projected statement of financial position. So, we have our historical balance sheet from years 2018, 2019, and 2020. So, for in projecting our statement of financial position, mag-need gihapon ta og assumptions. So, these are assumptions for this illustration. So, to get our cash, unsa man atong cash? So, we have the assumption here that minimum cash balance of 35,000 is required. So, ang atong cash should be 35,000. Unya, we have our market securities. Marketable securities will remain unchanged from 2020's balance. So, mutan-aw ta, pila di ay ang market securities pag 2020. So, we have market securities of 120,000. Then, accounts receivable. Accounts receivable are estimated to be 35% of projected sales. Refer to previous illustration. So, 35% of our sales. Tara, net sales na to of 165 times 35%. So, we have our accounts receivable of 57,750. Then, inventories. Ending inventory is expected to be valued at 48,000. So, natay inventories of 48,000. If you could remember, di ba natay koan ka na katong two approaches, then natay percent of sales and judgmental approach. So, dire atong gigamit is judgmental approach kay nag-assume rata in every account kung pila siya dapat on that year. So, we will now determine our PPE. So, unsa man atong assumption on PPE? A new machine will be bought for 50,000. Because of this acquisition, depreciation will increase by 5,000. Thus, a net increase of 45,000 to the net PPE is required. So, natay net increase of 45,000. Net increase from our previous balance. So, unsa man atong PPE pag 2020? We have 320 plus ang net increase na 45. We have our projected PPE of 365,000. So, we will just add our current and non-current assets. So, 260,750 plus 365. We have total assets of 625,750. Then, kaya ba man ang total assets na to should be equal to our total liabilities and equity. So, i-bring down rin na to siya. Then, so we have total liabilities and owner's equity of 625,750. Now, we want to know pila ang atong liabilities. So, going back to our assumptions, number 6, purchases will approximately represent 80% of sales. DNE expects 45% of purchases to be paid on the following year. So, 80% kuno of our sales, our purchases will represent 80% of our sales. Unya, sa 80%, ang 45% ana will be paid next year. So, ang 55% is gi-paid na siya karon nga year. So, we will go back to our projected income statement. So, atong net sales of 165 times 80%. So, we have our 132,000 purchases. Unya, di man na tanan payable. Ang 55% ana is paid na on that year. So, times 132,000 times 45%, which is ang supposed to be payable on the next year, we have 59,400. Unya, dirita sa atong notes. Notes payable will remain unchanged from its current level. Current level. Unsa man itong current notes payable? So, we have 25,000. So, notes payable at 25,000. Next is ang, unsa man ang naadiri? are taxes payable. So, asa kani number 7. Taxes payable will be 1/2 of the projected tax expense. So, pila di atong tax expense? Going back again to our projected income statement, ang atong tax expense expected or projected tax expense is 9660. So, divide by 2. Therefore, our projected tax expense or taxes payable will be 4,830. Now, for our other current liabilities, the 175,000 other current liabilities must be paid off in 2021. So, naman tayong balance ng other current liabilities pag 2020 of 175,000. Then, ang atong assumption is ato na siyang tanan ma-pay off na nato siya on 2021. But, so 0 na dapat siya. However, napatay another assumption. A long-term debt of 50,000 will be reclassified as current. So, long-term debt siya na mahimong current. So, from non-current liabilities, mabalhin siya diri sa current liabilities. So, ato siyang ibutang sa other current liabilities, which is 50,000. So, we have our total current liabilities of 139,230. So, loans payable. Ang atong loans payable pag 2020 is 250,000. However, according to our 10th assumption, a long-term debt of 50,000 will be reclassified as current. So, from 250,000 na non-current, minusan nato siya 50, which is atong gibalhin sa current. So, we only have a long-term debt of 200,000. So, our total liabilities shall be 339,230. Next, our 11th assumption, there will be no changes in share equity accounts. So, ang atong common shares and retained, atong common shares is as is siya from our 2020 na balance. So, we have 100,000. Common shares, 100,000. Unya, lastly, ang atong retained earnings. It will increase daw by 22,540, which is our projected net income sa atong previous illustration. So, ang atong beginning balance sa retained earnings, which is 32,000 plus ang atong projected net income, which is 22,540. So, ato rin siyang i-add sa beginning retained earnings to get our projected retained earnings for 2021. So we have 54,540. So our total liabilities and equity before additional financing is 493,770. However, dapat ang atong total liabilities and owner's equity equal sa total assets. So, naatay kuwang. So, we will need additional financing of which is, so ato siyang i-minus 625,750 minus 493,770. So, we will require for an additional financing of 131,980. So, there we have our projected statement of financial position for D&E Company as of December 31, 2021. So, nahuman na tag forecast sales, costs, and other income and expenses. Nakahimo na tag budgeted sales, budgeted production. Then, nahuman na po tag prepare sa atong projected financial statements. So, we will now analyze and evaluate projected financial statements. to analyze and evaluate projected financial statements, maggamit ra ta sa, we will just utilize katong horizontal and vertical analysis as well as financial ratio analysis. So we already discussed and learned about that pag prelim. Then after analyzing and evaluating our projected FS, it will be reviewed and evaluated. So our projected financial plan will be reviewed and evaluated if niayon ba sa atong goals, if they coincide with our company vision and mission and overall goals. So we will have our third quiz. It will be posted this week, as well as quiz 4, which is a group quiz katong akong gipost nga groupings. So I think quiz 4 will be posted next week. Then I will also post this week our second performance task. So by group gihapon ni siya. Ang deadline sa atong performance task will be before our midterm exam. So my presentation ends here. Thank you so much for those who are viewing this simple video lecture. And if you have any questions, please feel free to message me on MS Teams, or much better if mo-post ta sa atong queries channel para makakita po ang uban. Kay basin, same ra mo question, then maawaw ra mangutanan na. So, you may send me a message or post ra sa atong queries channel. So, I hope you learned from this presentation as well sa atong budget plans. And I will see you all on our next module. Thank you.